I'm Christine Davis. I'm one of the owners of Active Adults Realty, and I'm here with Pete Green. He
Hello.
is the senior mortgage banker with Atlantic Bay Mortgage. I want to make sure I got your title correct.
Perfect.
So we want to talk about interest rates today because I think it's on everybody's mind.
It is, yes,
so
absolutely.
Where are the interest rates today?
So as of today, rates are in the high to mid-5 range, mid-5s to high 5%. That's a 30-year fixed, standard conventional rate. The Federal Reserve increased rates yesterday or this week, and it doesn't mean mortgage rates went up. They actually went sideways this week, so that's just a fun tidbit that they've been fairly stable this week, even though the Federal Reserve increased rates.
Interesting. Okay,
Yeah.
and that's for the conventional rate.
Correct.
So what about jumbo loans? Where
Yeah.
does that come into play?
Yeah, so a jumbo loan would be all loan amounts $648,000 and higher. We're seeing more of those, obviously, because of the appreciation in our market. But the good news is it's actually a more affordable interest rate, believe it or not. So right now we can lend someone $300,000, maybe in the 5.5-ish range on a 30-year fixed conventional mortgage. On a jumbo mortgage, we're in the high 4s, low 5s on. So even if it's, let's say, $1 million loan.
Yeah, which sounds enticing right now, high
It
4s.
does. Well, and with prices going up, it's kind of handy because it just keeps
Sure.
that borrowing cost low for everybody.
Yeah. Where do you think interest rates are headed?
Yeah, I think everybody knows that rates are headed up. If you look at the curve, it's sort of like this, the graph. But if you look at it overall, it's they're going up. In the short term, I think we're going to see rates go up, and I know this sounds really crazy from a mortgage broker, but basically we want them to go up. We want the rates that the Federal Reserve is increasing to go up, so that really has no direct effect on mortgages, but we want those rates to go up because it will cool inflation. If the government can get inflation under control, then I think we'll see, segue to the second question, we'll see mortgage rates decline later this year.
Absolutely.
And the economic experts who study those things and those curves and what's happened after housing appreciation and things of that nature, pretty much all the time they do go down in this type of environment.
That sounds good to us.
Yep.
So what are some other things that buyers should consider right now, keeping the interest rates in mind?
You mean things like how to get the rates down,
Yeah,
lower
how
the
can
borrowing
we-
costs? Yeah. So there's a couple different things. So a lot of the questions we're getting right now is, hey, what about ARM rates? So ARM rates do exist, they are out there, but they're not quite good enough to make sense, jumping from that nice stable fixed rate. Now, of course, if you went to something like a 5-year ARM, that may be true, but then you're taking on a decent amount more risk for a temporary, payoff. But as fixed rates do sweep up in the short term, I think we'll see those longer term ARMs, like a 7-year fixed, 15-year fixed, 10-year fixed, 15-year fixed. I think we'll see those emerge to be more attractive.
So what are your thoughts on right now paying cash versus getting a mortgage because of the interest rates and where they are right now?
Yeah, so historically, borrowing rates, I know doesn't feel like it because we're so spoiled, and people don't really want to hear this. Oh, it's not that bad, but the truth is that so I've been in the business, been lending in this market for over 25 years, and the last boom we had, rates were in the 6s. So I think the most important thing is what is demand going to do to the prices. So with all that said, to answer you long-windedly, I think that borrowing is still a really great play because you're getting your money in the 5s, okay? And right now with the volatility in the stock market, you have that to consider, appreciation to consider. I think it's better to take a fast move, take some borrowing, take the deduction if it qualifies, and then it will really pay off.
Absolutely. So I think what you've hopefully heard here today is you need to go with a trusted advisor like Pete. He obviously has been doing this for a long time. He knows what he's talking about. And have the conversation with him up front. What are some options? Maybe we take some money out of our 401k. Maybe we do something called like a recasting, which we'll do that on another video. But I just wanted to make sure you guys kind of had an idea of where interest rates are, where they're headed, and that it's still a great time to buy and move to Delaware. And Pete is here as your lender to help out. So thanks for being with us today,
Thank you so much.
Pete.
Thanks for having me.
We'll catch you on the next video.
Sounds good.